Uniformly across the country, AT&T charges the same rate whether you call California or down the street. It's basically, if the phone call lasts for some time, then they charge for that. But the IRS resisted and resisted. They won in some district courts because the judges were pushovers for the IRS. They sucked up to power, and they took the IRS's statement whole. But other district courts said, no, these people are screwed up. And then they went to appeal, and they lost in every circuit court of appeals in the country. They lost 6 out of 6. And these circuit courts of appeals said, you know, you can't mangle the definition of the word and to mean and or. And means and. And they laughed the IRS out of their courtrooms, and the IRS lost every case. Because the IRS was saying, we get to charge this excise tax if there's a distance ring-based calculation and or if there's an elapsed time calculation. So we're going to keep collecting that tax on all your cell phone calls, even if there's no distance rings. And these judges correctly said, you are jerks, and means and. You have to have both conditions, not one or the other. And the IRS was thrown out in 6 out of 6 because their definition, their self-justifying, self-aggrandizing definition was ludicrously, plainly wrong. Self-serving, an agency that can't even get the word and right because they're self-serving. They want your money. And the illegal collections that they took over those 109 years since the Spanish-American War, if you put it in today's dollars, is $1 trillion that they took in from the American taxpayer illegally by mangling plain definitions.
You had your name is Matt. Where are you from, Matt?
Michigan.
Michigan, okay. Have you had some success with IRS against getting some refunds back?
We are working on that for a filed return. Actually, we have a couple filed returns, and there's still some fixes to iron out with some account errors that were changed from when we filed that we're working on.
And have you? So you haven't gotten any money back yet from your filing?
Only from a local return.
State?
But the federal one, oh, it's a city actually.
City, okay. Yeah. So this is for 2008?
Yeah, for 07.
7, and have you already filed for the state and federal for 07?
Yes, yep.
Okay, and so you're not, you don't know yet on that?
Right, we're kind of waiting.
And do you expect to get your Social Security back as well? Did you attempt to do that?
That is part of the refund request. I mean, I've learned from reading the law, and you read about, I don't know how much, depending on what info you want, but the taxes, the FICA taxes, are strictly applied to the receipt of wages as defined in the revenue laws, okay? And they're also applied to self-employment income. I could say things in quotes because basically what a lot of others have learned is there are custom terms with a scope of application. And like a term used, once it's defined in legislation, it gives it a custom definition, and it doesn't necessarily mean any word that you could think of to be associated with that word. So, like an example, like you said, Social Security Medicare tax is basically they're a tax upon income, a special kind of income called wages or self-employment income. Now, I didn't say money. I said upon certain classes of receipts, and so if one didn't receive that kind of receipts, or or only a little bit, maybe they may be able to get the refund back. But they reading this book and also going beyond what the book says and reviewing the info on the website, but also researching and pulling the statutes he references, the derivation tables, revenue acts, judicial decisions. You can pull them up on the internet. You can go to the library and research them. They agree with what the information he's presented shows. So basically, I suppose the best way to say it is due to misinformation or maybe false information, where everyone assuming the world is flat when it's really round, but never bothering to really check into it, and using inference, activities not taxable are colored as looking. Didn't do the taxable activity, then you fill out the return properly based on what you did, and then it may result in a refund. A lot of cases it results in a refund. There's a case, Roseman versus United States. There's others. Basically, when let's say money's taken from you during the year, like people say, from your paycheck. People call it withholdings or different things. The courts have clarified that those kind of payments are called payments in escrow. So they go into account for you, and they're kind of like, some would call it prepayments, or it's money set aside, and then if you have an eventual liability, it's applied to the liability, and whatever's left over gets refunded to you. So no tax is actually paid until an assessment's made, either when you fill out your return, or if you don't file a return at all, the IRS can make a return for you. Based on information available. So basically it's your responsibility to report the correct information from your first-hand knowledge, you know, from what's correct based on what. If you earn taxable income for performing activities that are taxable, then you owe a tax on it. That's just how the law works. But now if you don't, then you don't. There was a court case called South Pacific versus Lowe, where the government was talking about a company. The government was arguing that all the receipts of this one company were automatically income, which is another term we've learned about recently. But then the court said, we must reject in this case, as in a couple other cases, the broad contention submitted on behalf of the government that all receipts, all that comes in, are income within the meaning of the term gross income. So basically, you know, in learning and researching, basically it's kind of opened our eyes to see that custom terms that describe one thing are made to look like they apply to everything, and thus to make it look like everything that comes in is income. There's a case called Brushaber versus Union Pacific Railroad, where a man tried to argue that the 16th Amendment, for example, was trying to tax everything that a person would earn and not apportion it at all. And the court called that an erroneous assumption and was clarifying the scope of it, basically, that, and they confirmed how it was a term with a limited scope of meaning, and it didn't apply to everything that one does. And it was in a contract, like look at an insurance clause, you know, look at acts of God, it has a definition, you know, total loss, it has a definition. There's definitions for so many things to give it. There's a court case, for example, Meese versus Keene. It says it's axiomatic, that just means self-evident, that the statutory definition of a term excludes unstated meanings of that term. So basically, when Congress creates a term for something, a definition, they give it its awaiting the refund claim, and yeah, it's kind of interesting, and wow, it's a blend of, I guess you could say, excitement, interest, and maybe disgust at a lot of this information could be more easily distributed to many, many people.
Hi there, my name is Shandor Bors. I'm from Pittsburgh, New York, and in 2006 I read this book written by Pete Hendrickson from cover to cover. I had to read it 3 times to fully understand it, but since that time I have filed knowledgeably, and the state of New York has responded by returning all of my withholdings that I've requested. Unfortunately, the IRS is slow on its feet, but I am patient, because I know, in the end, the rule of law always wins. And this little statement here will have the power and significance that it once had. Thank you, Pete Hendrickson, for enlightening me. Thank you.